Hi, I'm attorney Robert J. Skronsky. From a client's perspective, one of the most surprising aspects of bankruptcy is that for many, a bankruptcy actually helps them qualify for car loans and mortgages. Not only that, but it helps them obtain the good loans, what we call prime loans with the lowest interest rates, quicker than they would have ever been able to do so had they not filed a bankruptcy. Now, before we discuss just how long it takes clients to qualify for the best car loans and mortgages after a bankruptcy, we'll begin by exploring the more interesting question of how does bankruptcy help qualify clients for such loans. First and foremost, bankruptcy assists clients in obtaining prime rate car loans and mortgages by wiping out the main barrier to obtaining new loans, and that's old debt. Whether you're maxed out on your credit cards and only paying the minimums, falling behind on your payments, or not paying debts at all, it's all the same bad news to a potential creditor. Each of these things tell a lender that you're either too close to the limit of not being able to afford additional debt, you're at the limit, or you're way beyond it. And if you can't pay the old debt you already have, to most lenders, you're simply too big of a risk to give new money to. So either A, you won't get a new loan at all, which happens in the majority of cases, where your mainstream banks, your Chase or your Citibank, will most likely refuse to give you the loan at all until you deal with your old debt or pay it off, which may take 10, 15, or more years if you're only paying the minimums. Or B, you may find a lender that's willing to give you a loan even with the old debt hanging around. These are called subprime lenders. But you'll be paying enormous amounts of interest on the loan, and that can get very expensive. In fact, I often see interest rates of up to 30% for individuals in this type of debt situation. And that's shocking, because a $20,000 car loan at 25% interest for 5 years costs about $35,000. So the interest on the loan costs you just about as much as the actual car. Yet people are willing to take on such loans because they can't get a loan anywhere else, and they still need the loan for the car or whatnot. But after a bankruptcy, this situation is entirely different, because after a bankruptcy, most clients are completely out of debt. And remember, these people who now don't have debt still have jobs or other sources of income. So if they take on a new loan, they have the ability to pay it back. And lenders know this. That's one of the reasons why our credit score relies so heavily on debt-to-credit ratios and other indicators which tell lenders whether an individual has more debt that they can handle. Now, the second reason why bankruptcy helps clients qualify for good loans is that it gives them an opportunity to rebuild their credit history and scores. Let's face it. When you're struggling with debt, you're bound to have a history of late payments, sporadic payments, and even non-payments. You probably have maxed out several lines of credit. You may even have lawsuits, judgments, garnishments, and bank freezes. All of this helps to make for an awful credit report and score. Now, after a bankruptcy, most clients have no debt, and thus they have an excellent opportunity to rebuild their credit history and scores. They do this by obtaining a secured credit card, making a charge on it every month, like $5 or $10, and paying it off each month on time and in full. By doing this every month for 2 to 3 years, they can create a good credit history. And because credit scores go back only a few years, this behavior can get you an excellent credit score, even between 700 to 800 within 2 to 3 years after your bankruptcy has been completed. When you're in debt, this would have never been possible, because every month there's something negative being reported on your credit report. So bankruptcy gives clients a shortcut to qualifying for such loans, because it helps them rebuild their credit scores immediately after their case is filed. A third reason bankruptcy assists clients in getting good prime rate car loans and mortgages is because it gives clients an opportunity to save up for a down payment on these items, which in many cases is a requirement to obtaining loans these days. When you're in debt, usually every dollar you make is devoted to the payment of necessities and minimums. You often don't have the ability to save up even a dime. Yet in today's changed market conditions, most lenders are no longer giving out no money down loans. Instead, they require that you have some skin in the game to get a good loan. And that's why to get a good mortgage, most lenders require a down payment from your own money of 20% of the purchase price in order to get approved. Now after a bankruptcy, clients have that ability to save up for this down payment because they're no longer using every penny they have to pay on old debt. The money they previously used to pay for minimums on their credit cards can now be put aside and slowly but surely built into a sizable down payment. So now for the big question, what we've all been waiting for. How long after a bankruptcy does it take to get the good, prime rate, lowest interest car loans and mortgages? Well, while it's true that almost all clients report getting bombarded with car loan offers shortly after their bankruptcy is filed, I generally advise them to improve their credit scores and build up a down payment before they make such purchases and obtain such loans. This generally takes about 2 years after a bankruptcy. But as I said, if they wanted to get one earlier, most could, even shortly after their bankruptcy case has been filed. But by putting in the time and really minimal effort, clients can save themselves thousands by building up their credit and down payment and thus qualifying for the lowest rate car loans. And we're talking just about 2 years to do that. Now as for home loans and mortgages, most lenders don't see bankruptcy as a barrier to approving a mortgage after 2 to 4 years. And that's fine, because as we stated before, to get a good interest mortgage, most lenders require a down payment of 20% of the purchase price and a rebuilt credit history. Both take a minimum of 2 years to accomplish anyhow. The irony is that without a bankruptcy, many clients would not be eligible to obtain low-interest car loans or mortgages. But shortly after their bankruptcy, they can get these things. So if you're sick of being denied prime rate car loans or mortgages because your old debt is bringing you down, call me, Attorney Robert J. Skowronski, at 773-283-1600. I'll help put you in a position that makes you closer to accomplishing this goal much more quickly and with less effort than you ever thought possible.